Good morning, traders. It's Tuesday, the 24th of May, 2016, 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. A fair amount of news overnight. Mainly the European markets have been led up by miners and banks. Pushing the European indices quite high. Euro stocks up 1.54%, the DAX up 1.36%. Crude oil is also higher. It got as high as 48.55. We're trading against the high in crude overnight. We heard from the Toll Brothers, one of the largest real estate developers here in the U.S. There's also a there's also some talk about the potential for Saudi Arabia to having to depeg from the dollar, the real from the dollar, which crude is completely ignoring. The zoo survey came out this morning in Germany, came in at 6.4 versus the 11.2 print that came in April. The expectation was 12.1. The market basically took a drop on the open and then rallied up strong. But that's about it. The other thing that's looming is the Brexit vote. Apparently now the folks who want to remain in the Eurozone have exceeded with a wide margin the folks who want to leave, 55% versus 42%. And then, of course, Deutsche Bank was downgraded by Moody's from Baa2 to Baa1. As far as what we're expecting going forward, this morning we're looking for Richmond Fed at 9 Central, 10 Eastern. We're looking for new home sales at the same time. New home sales for April expected at 521,000. Richmond Fed expected at 8. As far as speakers, the calendar is fairly clear. The Eurogroup meeting started at 6 a.m. Central, noon UK time, 6 a.m. Central, and it continues for the afternoon. That's what's on deck for today. Let's have a look at what happened yesterday. Here's what was expected yesterday. Let's take a look at our conclusions. Yesterday we ran into some technical issues. We ended up pushing through and having a trader bite anyway. I know a lot of you missed it. It started late. It was short, but this was the primary hypothesis here. Was looking for a test of the prior day's value high, looking for a choppy open. You can see here, setting out a choppy open, looking for a test higher, but the overall condition for hypo 1, and this is what I don't want you to miss. I really need to make this clear, that my intent is not to come on here and tell you that the market's going to turn right here and right here and right here and so on. That is not the goal of these. That is not the goal of these hypotheses. I'm not looking to call every turn. I am not an oracle. Nobody is. If I told you that I was, then you should probably leave. I'm lying. But the goal is to base a plan, any plan, on the normal market behavior. And in my case, I look at the auction behavior, the normal auction behavior of the market. And that's what drives what I do as a trader. Now, you know, as you trade bigger or as you grow as a trader, in general, you'll want to have a stronger handle on what the auction is doing. Why is price moving is not as much of a concern as it is moving, and these are the areas it's likely to test up and down. So, in a comment, folks, in a comment, and I see this often, I'm not picking on anyone in particular, the comment is, how can you tell that it's going to turn here? It's impossible. And so that's not the idea. The idea is to say, expecting an open auction, so sit on your hands on the open, expecting a noisy open, and then a potential test of value high, which is what that peak is. This is value high right here, the edge of the gray area. And then the overall condition for hypo 1 is to test lower. Is it going to test down into 2035? That's my target. I don't know. But these are the areas that it's likely to test through. I'm looking for it to push through the mid, through the gap zone. I look for it to bounce at the mid of the gap zone and so forth. This is what I visualize it doing. Whether it's going to do it or not is almost irrelevant. It almost is irrelevant because the goal here is to have a plan for if the market, as primary hypothesis, if the market drives lower, these are my areas for the market to target where the market's likely to respond. Okay, so this is how we use these hypotheses. It's not the goal here to buy and sell every one of these turns. That's not the intent. That was the primary hypothesis. The primary hypothesis is a very choppy open, test higher, and then move lower. That's the primary hypothesis. The secondary hypothesis is outlined yesterday. So clean this up a little bit. As outlined yesterday, is very, very choppy and looking for a market that is likely to test the value low and then push the high. And I talked about the balance likely to carry forward and be the same as the prior day, which was Friday. But overall, looking for a very, very noisy trade. And then I said there's a potential of testing the having an engulfing day, and also was looking for a potential for a neutral day yesterday. So that's what was planned for the day pre-market. I know many of you missed it. Here's what actually happened. In fact, what I'd like to do this morning is show you how these play out. Okay. So let's start the day. This is the prior day. This is Friday. This is how we closed. This is how things looked. And the market opens, and there's the initial opening swing low. Look at that opening swing low right up against value low. Okay? So we're opening in range, in value, in balance. This is a balanced day. So the initial tests of value high and value low are very important. So there's the opening swing low is right up against the 47.50 value low. And so next I'm looking for a test of value high. Okay, so actually next I'm looking for a test of the point of control. This pink line right here. This is the most traded price of the session. It's also a cluster with the MC point of control right in that 51 area. So that's the next area I'm looking for. I'm looking for a test here, pullback. I'm looking for value. I'm looking for a pullback. I'm looking for it to drive through, and that's what it does on a balanced day. Watch how these bars form. There's your test of 51 and a quarter. Small test, pullback, not much to do with that. And then as we drive forward here, it pushes lower, it tests lower, but it could not test the high. We still have a virgin value high test waiting or looming. I'm still stalking for that trade. Nothing to do. Very noisy trade, a two-sided trade. The opening swing is 51 and a quarter to 47 and a half. Still waiting for that value high test. And there's the value high test right here, 52.75. You can see the value high is outlined right here as 53. It missed it by a tick. And now the value area from the prior day has been fully tested, and we have confirmed that short-term traders are in control, which means that we have to trade from the outside in. We wait for the market to push out, and we're going to look for trades to push it back towards the mid or towards the point of control. As it pushes out, we're looking for trades to push back because it's in balance, and that is the balance plan versus the trend day plan. So here it is pushing back. There's a decent rotation there, a 3-point rotation, and I expect it to just check the other side. So that's what it does all day. It checks one side, then it checks the other side. There it is, checking the other side again and again. And what do we end up with? We end up with a market that's got a downward skew, okay, just like we said, hypo 1. but we also end up with a market with a balanced profile carrying forward. The point of control of yesterday is inside of the point of control from the value area of the prior day, and so what we have here is a market that's in balance. These 2 days essentially are saying, look, we like it up here. There is nothing for us to do up here. There's nothing new to price in. There's nothing else to test. There's a gap zone here. My flex levels are messed up this morning. I need to fix that. There was a gap zone here, and the plan changes. The plan becomes firmly hypo 1, even though this is playing hypo 1 right here, just as I explained. The downtrend was hypo 1. If we pushed into the gap zone, then I'll stock a strong sell trade. If it pushes into the gap zone and pulls back, I'm stocking a strong sell trade, and I'm going to look for it to push towards the 35, which was the value area below the gap zone. Now I have a trade where I can put on a full unit. The rest of the day, because it's imbalanced, because it's choppy, I have to trade smaller units with wider stops to keep a consistent risk value overall. That's how these hypos work. Okay, it is not intended for you to just blindly follow the lines that I'm putting on the chart, because there's just no way to know what it's likely to do before it does it. I'm not claiming that I can't. And so that's how things shaped up yesterday. We ended up closing weak. We closed outside of the point of the initial balance. We did not get neutral. We got very close. This was a perfect setup day for neutral. You can see the tails on all the average price, the average volume per time slot. You can see the long tails, and so what that tells us on our volume per time slot, in this instance, the time slot's 15 minutes. Each slice is looking at the average volume going back 20 days, and these tails are what the average is. And you can see that the actual, which is the red and the green, was lower, telling us that it's a balanced day with weak volume participation. There's a holiday yesterday, that's true, but overall participation was very low. So what does that tell us? It tells us that we have 2 days of balance, light participation on the second day. Look out for a break away from this area. We combine these 2 days together, what we call a composite, and now we have a composite profile, and a composite profile shows us that 2050 is a brand new point of control for these 2 days. When you have 2 days of balance, especially tighter and tighter balance, look at this, how beautiful this profile is, just completely Gaussian, just like you'd see in a statistical analysis book. And what this does is it means we are likely to drive away from this area over the next couple of sessions. The market does not stay in balance for very long, especially in the short term, before it breaks out. For every long, there's a short, and eventually what the market will do is it'll have something it'll have something to test out or revalue, and as soon as it revalues, all the participants that have created all these volume bars here, a lot of these participants, whoever's on the wrong side, will have to join the other side and cause this push away. Whenever we have 2 days that are in balance, we're looking for imbalance or a push away in the next session or two, because we have enough energy. Just think of this like physics. It's coiling, 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 and it looks for a release. And it coils, 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 and it looks for a release. Okay, so that's an explanation. I've burned up pretty much the entire time for the TB to cover that, but I want to make sure that you understand what the purpose is of these trader bites. It's very, very important that you recognize that it's not intended to be some sort of a crystal ball for your trading. The goal here is for you to understand how the market works so you can come up with your own plan. Look at this profile overnight. What this tells us on the overnight session is that the market found no consensus whatsoever in the information that was provided in the overnight session. The market is trending up. The point of control has been shifting higher. And we have a strong trend from the European Open. The European Open was, oops, the European Open was right here, and as I said, the miners and banks are very strong this morning, and it's not able to find the sellers. We have a point of control that has shifted to the high. We have a weak high. This is likely to continue higher. Okay? And so the overnight profile is telling us that we already have imbalance. It has tested below the 2-day low. So we have tested into the gap zone. Look at the low, 41 and a quarter. That is exactly the mid of the gap zone left behind between Thursday and Friday. The mid of the gap zone between Thursday and Friday, which was 39.75 to 42.75. The mid of it was 41 and a quarter. That was the low. It tested the mid overnight. It did not rest here very long. A quick zipper and off to the races it goes, and it's trading the other side. This was a fairly coiled up push higher, and it's likely to let up for a little bit because the volume is not that high, 218,000. No holidays that I'm aware of. So far, the volume has been slightly light, but it has been seeking sellers and has not really found any. There's a sharp point of control here, but that point of control is likely to contribute to another push out. Okay, so that's how things are shaping up. I did want to cover some crude today, but let's get to the hypos real quick. The hypos for today, with the market likely opening above yesterday's range, inside of likely on the edge or inside of the 2-day balance, the most likely play is for a choppy open, but very, very quick. And I'm looking for responsive selling back to 51. I'm looking for this to base, and then I'm looking for this to start moving up towards that 61 and a quarter again, and then potentially 65 again. We're looking for not a trend day, but we're looking for a day that has an upward skew on hypo 1. Okay, and again, it's the reason I'm pushing to the 51 and a quarter is because it is the immediate point of control. We have this 2050 below, which is a 2-day point of control, which also acts as a magnet. Hypo 2 is likely to test low early on and then push higher and then look to fall back. And the reason is that the continuous, or this profile right here is the continued attraction that we've had now for some time to prices below 2065. Like I said last week, or I think it was on Friday or Thursday, as long as it stays below this 2065 right here, generally it's likely to get attracted to 51 and a quarter and 40.50. That's what I marked yesterday for hypo 1. These are likely to play out consistently, so that would be hypo 2. Hypo 3 is a break, is an open test drive type of behavior straight into 65, and then it's all guess. This 65 is the last frontier for the sellers to defend. It's all bets are off. Who knows what will happen at 65? Might pull back to 61 and a quarter and continue higher. That would be hypo 3, and then we have 4 and 5, but I don't have time to cover them because I want to really quickly cover crude oil, because crude oil is setting up, giving us a nice, strong potential play for the short side. I'm not telling you to get short. It's not a trade recommendation. But we have a gap zone here in crude on the pit session. You could see that there's very little volume. There's an LVN below. The market has pushed higher, come down, pushed to a lower high, and has come down again. What this is forming is a weak low with a gap zone beneath. I'm looking for oil to likely retest this 46.20 area, get down to 46.65 and 46.20 area. If oil starts to roll over today, then those are my targets. That would be my hypo 1 for oil. Oil, as long as it stays below this LVN right here that you see here, as long as it holds this 48.50, continues to battle it, I'm looking for oil to rotate back, and that's about a $2 trade back in oil, especially if it breaks through this 47 and a quarter area, then you're pretty much free, in my opinion, you're free to go. You have a gap zone here, and it's likely to continue lower and push through. Okay, that's the play for oil. Those are your hypos for the day. Hopefully, you're getting something out of this. I'll catch you tomorrow. Take care.